Alrighty, Doc here from North America. Zip, zam, and zowie. Good morning, good afternoon, and good evening. We have another fun-filled day as usual. The markets are being the markets. They took the stock markets down yesterday fairly well, A decent little move on the change for a change. I like how they get all panicky when they see that type of thing. It's very, I don't know, very primitive, I guess you could say. I enjoy it. It's fascinating to watch it happen. But, as you look historically, not since the 1970s have we seen markets kind of go into a comatose state. You have to remember that after 1980, Mr. Reagan really started to bring capitalism back into our society again. We'd slowly homogenated, like what you do with milk here in the United States. You boil it and you cut out some of the active ingredients, and we had the socialism go on for a long while, and then Mr. Reagan basically got a foothold to bring back capitalism at a healthier pace, and that's why America has grown so strong since William Bradford and the Pilgrims in 1620. People don't realize that America was a very strong, very developing freedom group of people for 150 years before we broke away from England. And so due to the fact of the distances and the hard travel, they had very little influence on the American society. And it was just too great a distance. It was a lot easier to go to India and these other places where they had colonized, or Africa, which was right down the road. But America, the weather was much more harsh. The environment was, just very hard to deal with. So, we grew, through our faith of God and the Old Testament, and we did a lot of things like that, and the New Testament was all put together, and it was a very interesting place. And then, we became independent in 1776, and the United States kind of, took off like a rocket ship. All of a sudden, what was done over 1,000 to 2,000 years, we were conquering, developing, and evolving at such a rate that we just outpaced the whole planet. Just a small group of us, Americans. And then it went like that all the way up until basically 1910, 1912, I mean, in the late 1880s, after our Civil War, we had some issues and more taxation, but we were pretty free for a couple centuries now, at that point, over 200 years. And almost 250 years up to the Civil War. And that's why America is so powerful. So, we're like a giant playpen, where you put small children when they're very, very little and they can't walk. We call that a playpen. And so we live in a big giant playpen between the Pacific and the Atlantic. And so in America, to watch the economics, I guess you say, vacillate. That means they kind of goes back and forth like the way the tide does in an ocean or a sea. That's what we've been seeing here in the United States. And since Ronald Reagan, it's been moving towards its grassroots. So we've been moving back to our natural state of free markets, free people, less taxes, less influence by government, more power by the people again. And so it's always interesting to watch that play itself out, It's like when they try to do fundamentals with quantitative easing since 2008. It's really hard to do fundamentals because, well, the whole fundamental structure has been removed. We're now governed by central banks. Central banks do everything. They are the buyer of last resort. It's not the private money sector. So it's kind of interesting to watch this whole thing, play itself out. And yesterday they get a little excited, and but in the end result, it's not that too dynamic. It's not that bad. So anyhow, that's where we are. The stock markets fell a little bit. They're kind of forcing their way back today. It's interesting to watch the currencies drop. I mean, I guess I always have my, we all know here that anybody that is here or who watches our webinar knows that, our accuracy is up in the high 80s, low 90s for long, long time, decades, a century, depending on the area that I've back tested. In science, my math goes back as far as 38 million years I've back tested. And yeah, that's with a million, not thousands or days or hours. 38 million years. So when I see a day like yesterday, it kind of reminds me of the fundamentals. And it's always nice to see the fundamentals on some level or another. In this case here, the fundamentals are, quantitative easing now. That's what we are. And so because of quantitative easing, we see some of the oddest things occur in front of our face. We see the ruble, the currency that should not be named, supposedly tied to gold and silver and oil. But instead, it's really tied to the dollar. And what do we see? I mean, the dollar is roaring. And what is the currency that not to be named? It's roaring, like as if they hadn't even invaded the neighboring country and is threatening nuclear war. I mean, this country is threatening nuclear war, and its currency is rallying. Like as if we could really trust the Russian nukes to actually work. But anyway, that's another scientific point of mine, so that doesn't really matter. Anyhow, that's where we stand. And as you can see on the screen there, we have the Swiss dollar Swiss pairs trade, which keeps on climbing. And over on the Chicago quant side, what is that? We're looking at natural gas at the moment there. But let's get the currency up on there. Take a look at the Swiss there. So we have a long, long story of explaining why America is America and not the fake socialist point of view. That's always a fun thing to discuss. It freaks out a lot of people because they're only geared towards understanding the socialist side of things. But that's all right. We slip that out once in a while, and that's what we do. We talk about real markets, free people, real economy. And if anybody can show a technical analysis point of view that's better than mine, do it. Because I'm up around the 90 percentile all the time for decades. So let's get that. Oh, let's get the on J. Let's see. JForex has it. Let's open it up. Let's get the Swiss up on Chicago Quant, and there it is, right there. Dukascopy day week, open sesame. It's always fun. The markets always are fascinating. They keep me young. They keep me, in the know. And we're here to make money, not to trade. That's the whole idea, is to make money. And so that's the way we roll. And what do we got there? There's a blank screen. That is New Zealand against the dollar. It hasn't updated yet, but we will find it soon. Oh, there it goes. There's New Zealand. Wow, look at that. They've been driving down. Went into a daily sell here in our math. And, they went into a daily buy there after that win-win chicken dinner thing. And then, again, day later, went into the sell again. Right there. One or the other. Either way, it's down. And that's the name of the game, is to be on the right trend, to be accurate as much as possible. Now let's jump over to the dollar Swiss right there. And it's going to be loading in a few seconds. Well, we're going to take that excuse to... Oh, look at that. Wow. All I want to say is, ouch. Do I believe that the Swiss has lost its ability to be a safe harbor? No, not at all. Why do I think this is going on? Dollar is basically at all-time highs. I would assume they're trying to short it, and they're not really allowed to short it. No, it's because the Federal Reserve and the U.S. Federal Reserve and the U.S. Treasury say, no, you can't. So we're seeing every other thing denominated in dollars get sold hard. And that's what we're really seeing across the planet. So, and it is a unique thing to see. And we keep on hearing these odd stories about China. I mean, China sounds like it's in total chaos. Its statistics and numbers are off the rails in being accurate. And Mr. Biden is coming to the end of the road. They seem to have him caught. I mean, he's been selling influence a really, really long time. And they tried to hide that for the last 2 years. And it seems to have come to an end. You know, Mr. Biden, we're going to go through a Richard Nixon period again. So I guess they're running towards the dollar. And they're running towards the ruble. That's fun, isn't it? I mean, really. Can you really... I mean, look at this. The ruble is now before the invasion. So it's like, all done. It's over. But obviously the Russian army is taking it hard on the chin. And they've had to retreat to the borders of their own country. And they've got, I guess, a zone or something like that. And they're just indiscriminately firing cannons and rockets and all kinds of things at all kinds of funny places throughout that country, which sounds like a war crime to me, but we'll see. Hey, Robin, this is like empty. Did everybody go away on vacation? I just gave a quick analysis of William Bradford and the Pilgrims up to Ronald Reagan. And why we are the way we are. It's interesting. We are seeing this massive move towards the dollar, which is a floating currency. Obviously, it might be our Federal Reserve doing it. Who knows? But in the end result is nobody on the planet has any power to stop it, because socialism will never ever overtake free markets and free people. Oh yeah. I gave a quick running result of William Bradford, 1618 up to 1776, basically the 250 some odd years, and the 150 years before we even became independent from England, and why we are the most powerful nation in the world, and we're not even 10% of the planet. We're like, what, 4% of the planet? 350 million Americans. So 350 million Americans out of 8 billion. So let's see, 10% would be 800 million, right? Yeah. So 10% would be 800 million people, and we're half of that. So we're like in the 4.5 area, and here we are. We outproduce over 50% of the planet. It's amazing. You could take the next 5 countries, and the United States outperforms them. It's amazing. And what is it? Is it because we move towards capitalism more and more, free markets, free people, that the markets decide, not pick and choose winners by political means, by government control? The only way I can understand why they are selling down the commodities, and why the currency that should not be named is roaring with the dollar, is because they locked it to the dollar. It is now backed by dollar-denominated assets. Now we jump over back to the Swiss, and I really have a hard time believing that the Swiss is that in shape. In other words, that poorly governed. I mean, they're not that much in debt, but look at it. Look at that spike. And then let's see what the other currencies are doing. There's the euro. Let's just give that a recycle thing. There we are. And the euro is sinking with the rest of them now. And look at the cable. Same thing. Smash, bang, crash. And there's a reason for it. And it's, I guess, the simplest reason is free markets, free people versus contained markets and control. Now let's take a look at one of the European nations that is also very free market, and that is the zloty right there, the Polish currency. Look at it. Very fine. Very consistent. Second largest industrial nation on the continent. Barely budging against the dollar. That's against the euro. This is the euro zloty. Matter of fact, I guess in some ways it would be interesting to see what the dollar euro. Hey, George. George, did you hear my ramble about William Bradford and the Pilgrims all the way up to Ronald Reagan? It was pretty entertaining. It pertains to why we're seeing such a strong dollar and why the planet or all the other currencies are having their issues. And we know there's no way in the world Swiss is underwater like that for any other reason more than just the way the economic system is set up now on the planet. By only 4% of the planet controlling it, the most freest, the most independent, the most wealthiest nation in the world. And it's something to be thought about. I know the socialists out there and the people who want to believe that government can do better than the free markets and free people, but it's just something to be thought about, and we see it in the commodities. We've been, Robin and I have been trying to tell our commodity traders they're like, they're getting smashed. The commodities are. Our traders obviously are not. We're pretty much right 9 out of 10 times in the products themselves, so it's not, we're not getting beat up that way. But like there, you can see. Let's do the soybeans, since soybeans are done on Ducoscopy. You can see here, as much as they're trying to go down, they're not doing too good a job at it. Now over in the cattle, you can see they did a good smasheroo right there with the rest of the commodities on Monday, and that's Tuesday, and they haven't started trading yet, so we don't know what's going on there. But the weekly is in the buy. It doesn't want to really give up. All it's done is fall back to where it went into the daily buy, really, in the end result. So poor money management, you may lose money. But if you use good money management and our technical analysis, it's pretty much almost all the time, very close to it, winner, winner, chicken dinner. And so that is what's really sitting in the back of my mind today. Is it's just amazing. I have, you can see it on J4X. I just have a hard time taking the price action of the Swiss. That's serious. I don't think it's that bad. I think the Swiss is a good currency, and I think the cable is a good currency, but they cannot compete with the U.S. Federal Reserve and the U.S. Treasurer and the free markets. It just makes it really, really hard for them to compete against that power, All right, looking at the zloty, that really tells you a lot. That was from the war. That was the neighborhood that they're in. So the war takes off. The zloty goes roaring up, losing money. Then it comes back down basically to its mathematical mean, I guess you could say. Just a little, little. That becomes like the support area on the support area on the way down. So it kind of hangs out there. And now all these currencies are flipping out. And the zloty, since they are free people and free markets, and they're the second largest industrial nation now on the continent, being the 6th or 7th largest nation on the continent. So that just shows you again, free markets and free people are much more productive in the end. It just is what it is. And it's screaming in our faces, so I got to talk about it. And I really saw there's an analyst, Gordon Chang, here in the States. I forget who he works for. I think somebody relatively pro. Let me look him up real quick, because I was watching him this morning, and he's always comes out with incredibly good data, and good ideas, and he's just always just sharp, just sharp. Let's see. Let me see if I can find him. He has a foundation too, I think. Yeah. Gunther Chang is a columnist, author, lawyer. He is the author of Coming Collapse of China, in which he attempted to predict the collapse of the China and claimed that it would collapse by 2011. So he's 11 years off. He changed the timing of the year of the predicted collapse to 2012. Obviously, still 10 years off. And let's see, what else can we say about him? But he makes a lot of sense. He follows a lot of statistics, and he was saying that last month alone, 17.5 billion left China in investments, just in 1 month. So no other country, he says, in the world is doing things like that. Having those issues. He said that the producing managers report came out and it collapsed again, but somehow or another the statistics themselves were pushed up. And he said GDP the same way. None of them make any sense. So I guess he keeps on talking this. I guess sooner or later it's going to happen. It's just a matter of time. He says he thinks that Xi Jinping will get reelected at the conference, but he's not totally convinced that he'll get elected a fourth time, because his handprint is on everything that's going on. So, he worked and lived in Shanghai, and he's written about all kinds of wonderful things, but his prediction on the China collapse is not happening yet. He's underestimated what communism is in China, obviously. But his statistics are right on. They're always right on, and I guess that's why they don't have a currency. So I just thought that was fascinating today to bring out the pilgrims and why our country does so well for being so small. It just screams at us. Robin and I were looking at it, George, and it was like on Monday, everything that was denominated in dollars got sold hard down. And that's when it became very apparent to me the currency that will not be named, the Russian Federation's currency, is rallying so hard because it's locked to the dollar now. It's not locked to gold, and it's not locked to oil, because obviously those things have been down for like the last couple of weeks in value. So obviously it's locked to the dollar. And so it's one of the most strongest currencies on the planet at the moment, because it's locked to the dollar. And it's just something to be reminded of. And I have almost no doubt that that their ability to fire a nuclear weapon is only 1 in 3 accurate. I don't have any confidence at all. I mean, you can see how the Russian army's functioning itself. The corruption in the Russian military is so high. That's why their supply chains are so weak, and they can only fight against women and children. They can't really fight against other armies. Even if the other armies are undergunned and undersupplied, forgive them if they're supplied by the United States and NATO. Forget about it. There's no way Russia can even remotely win. So they have to threaten nuclear war. They don't have a choice. Obviously, they won't do it, because that'll be the end of Russia. But so that they'll just do the same thing they've always done, and that is, as Joe Stalin used to say, when you have a bayonet, you just keep on pushing it in until it's forced to stop. And that's pretty much what they're doing. All right. So we can go back now and take a peek. I mean, here is the euro right there. You see it's just rolling over too. Our green line has been moving down. It's matching the Chicago Quant daily indicator. See the green line there is going down. And the pressure is on. It's below the zero line here. And it has been strong, and it's been healthy, and it's just looking fine as kind. Our weekly's been in a sell since up in here in the 115-ish area, 116-ish area. What's the green line? The green line is 114.93, so 115, 114 area. So here we are trading in the 105 area. So it's down 9 full handles. That's a pretty strong punch in the face, as Michael Tyson, the old world champion, would say. And then we slide back over to the cable, and there's the cable doing the same exact thing. I mean, I really have a hard time believing that something has happened economically in those countries to justify this carnage that's going on with their currencies. And it's obviously the inflation. It's obviously the economics, the growth. The United States is still growing. They have not been able to remove what's his name, Donald Trump's economic policies. I mean, Mr. Biden is trying with executive orders, but overall he's been stymied because he just doesn't have any real. He's like very, very tight. They only have like a 3 or 4 lead in the House of Representatives, and they only have a tie-breaking situation in the Senate, so they really can't get anything too well passed. And it's what I talk about and what I describe always is usually the reality, the physical reality. And if it wasn't for our Chicago Quant Technologies ability, I wouldn't be able to say these things. Because then someone else would say, yeah, well, how come your math isn't any good? But obviously it's the other way around. It's usually right 9 out of 10 times. So that's pretty high percentile. And so it kind of gives us that extra validity. It gives us that extra knowledge. It gives us that extra step ahead of everyone else to be able to understand the marketplace, because it screams it. It tells us something is going on. Dollars are important, and everybody else is being parked to decide. It's in a safe harbor. They're all parked in a safe harbor, just sitting there. So the inflation is exploding on the globe. That's what it really is. I mean, the dollar is becoming so expensive, and we're the buyers. In other words, we're the consumers to begin with. So we can, we have, 7, 8, 9, I don't know, car companies in the United States. I don't know, whatever there are on the planet, we have them. Food producers, we have them. When it comes to steel producers, we have them. In other words, free markets, free people means there's a lot more competition going on around here, and it opens the doorway for growth and opportunity. And other countries, only have 1 or 2 at most, and then it kind of really slows it down. And so it's generating enormous inflation across the planet right now. I heard, we've talked about this. We don't play it too hard, but ECB said the European Central Bank made it very clear they're not going to fight inflation until the third quarter of this year. And that's pretty damning. I guess they're waiting for the U.S. House of Representatives to switch over, and the U.S. Senate to switch to the Republicans in the next 6 months. So we all know it's going to happen. And Mr. Biden, him making it to the end of 23 is going to be really dicey. Because if there's that red tsunami wave, the greatest victory in the history of America by the Republicans, in other words, the most power Republicans have ever had in history, will be laid out in less than 6 months now. And if that happens, and we pick up 6, 7 seats in the Senate, then I think you can pretty much guess that Mr. Biden is going to be removed or asked to step down like Mr. Nixon was. Mr. Nixon resigned. And I would imagine that they will ask Mr. Biden to resign. And that will only add more health to the U.S. markets. And that will, again, if no other nations besides the few that we've mentioned here are practicing free markets and free people, then we're just going to leap like a light year ahead of everybody again. So that's how we ended up with William Bradford as the beginning point of conversation. All right, from there we go over to the Turkish lira, the country that has tied option puts to their currency, which is so cool. I love it. I want to literally send a letter to Mr. Aragon and say, bravo. After your currency lost 12 handles, you've done it. You've done it right. It is so cool. Look at that. That's the euro against the Turkish lira. You can see we're in a daily sell for 3 full days right there. We are definitely looking good to be in that weekly sell. Maybe they're going to take her down to the bottom end of this range. There's the top end where the yellow dots are. And there's the bottom. So maybe they're just going to dance their way down to at least the 50 percentile right there. And that is so, so impressive. And free markets, free people. That's what it really comes down to. And in this case here, they have stopped doing the odd interference, like they're trying to buy their way out of a bad situation, and have just guaranteed that you buy Turkish lira, you will get exactly what you bought back again. And they gave them a free put. And that's really brilliant as far as I'm concerned. I mean, if you're like a South American banana republic financially, that's the best thing that could ever happen, guaranteeing foreign investors that they will get their money back. That's why they have to go bankrupt every so often and what do they call it, something or another, readjust. They have to create a new currency, and they have to sign a deal that says they're going to pay 20 or 30% of the money they owe, and they do all that stuff. In this case here, they just giving away free puts instead. Seems so smart. I know it's a scary word, calls and puts. I know that does scare some people. But don't be scared. Doc will lead you through it. All right. From there, we drift our way over to the Canadian. Right there. There's the CAD. CAD against the dollar. It's marching up towards the top end of its range, too. You can see it went into the weekly buy last week, and it went into the daily buy last week right there. And sure enough, it's higher than before. Again, Chicago Quant Technologies to the rescue 9 out of 10 times for centuries. All right. What else can we say about that? Normally what we do is we look at the Canadian, and then from there we drift over to take a look at oil, and then we look at gold. So let's do that. Let's take a peek. And also at the same time, let me just finish off J4X and show you the Euro-Turkish lira situation right there. Look at that. 3 days of the red bars. Green line dropping down, just like Chicago Quant. And then let's take a look at it in the form of the Canada dollar. Oh, Canada. Right there. Doing the same thing, marching north. True north. And that is the action we're seeing. So let's go. We're going to leave Canadian up on the screen here on J4X, and let's go take a look at those two other products. There is Earl oil right there, June oil, which was flirting with a daily buy. This was above at one point today when we started off. Let's see if we can show it to you how we sent it out. We sent it out to our clients a few hours ago. Let's see, where is it at? Crude oil. Right there. There it was a few hours ago. It was plus 22. Now it's minus 36. Can you see that? Let's see if I can do it this way. You see that right there. Can you see it right there? Yeah. So you can see it's at minus 36, but it was at right there. It was at 22 at one point. So it's feeling that pressure, and we'll get rid of that there. And then you can see it's moving down now. Now it's minus 45. It's in a daily sell now since here. Hasn't really done much. I mean, it went down, but and you can see we are flirting with our weekly sell with no problem there after an in and out, into a sell, into a buy, into a sell again. Well, it's 2 weeks now. So from there, we drift over to gold. Right there, there's gold. Gold has been in the daily sell since here. And we've been in the daily sell since last week. So the pressure's on there. And when we sent that out this morning, let's see where it was. I think it was looking a little bit better. Yeah, it was up. It was trying to lift. You see the green line was there. It was trying. It was at 1092. Now it's at 1072. So it's pressing down now. Let me just double check that one. I'm gonna see what I think they shifted some of the data in it. Yeah, just a little bit. Looks like we'll have to clean that up too. Let's give that a 1 day recharge. There it is. Let's just do a 1 dayer. No, we'll have to clean that up. Anyhow, that's what's going on there. The pressure is on. It's being pushed down. Now, because gold is going down in value, what we do is we go over to the South African Rand. And those two commodities kind of represent the Canadian. When they're going down in value, Canadian has a tendency to lose value against the dollar, which means it goes up. Now let's go take a look at the South African Rand. Right there, the ZAR. And let's look at it right there on Chicago Quant, the ZAR. And sure enough, because gold is losing value, this keeps on climbing like so. And you would think the currency that would not be named, right? This one right here would be up in here right now, right? I mean, it's being supposedly backed by oil and gold, but obviously not. It's being backed by the dollar. And that's why we see it that way. And I just have to, when I see it, I got to call it, And that's the way it usually works with me. I see it and I call it. And that's where we are. Let's just give that a refresh too. Look at that. What war? Is there a war? Look at that. It's basically, where's that line at? Let's put one of those lines in there. So that's where it's been. And that's where we are now. So what is this all about? Besides the fact that they have now locked, right in here, they locked their currency into the dollar. And look at it go. Cool, huh? Now, from there we run over to the yen. The yen slid into a daily sell there yesterday. You can see that right there. It's been having its pressure. I think this right here, let me give that a refresh because I have on another chart. Let's do this. Let's open up another chart here of the yen. I'm going to show you, and we're going to compare the two and try to figure out why that one seems to be doing what it's doing. All right, so where is it at? Right there. This is the chart we send out to clients. And there is the yen. And notice right there, it didn't give us those dots. Now, over here, let's see, we're running a gas 3 here up top, and we're running a 3.5 here. Now let's go, and let's see, let me just double check here. I think I see why. Okay. Close. I see. Now let's go over to here. And that's doing that. Let me open that up over there. That's why. So if I go like this with that, let me just change an input. Because that seems to be more accurate, the one we send out. Let's see what this does. Someone's saying that they're going to, that's what it does. It wipes it out. Okay, there it goes. It fixes it. So the cell's right there. That's what the issue is. And then you can see the red and green, the volatility and kick out right there, and you get that move. And you can see it here too. We get it right there. Would have been nice if it was right there, of course, but can't ask for perfection. Doc is right, 9 out of 10. Got to have a little drift, eh? So we get that, then it goes into the buy here. So we got our little sell-off for 3 days, and then it gets into the buy there without a volatility signal. But it does it here, and that should be moved over. So that's why we had to move it over that last time. And there it goes. There's the buy right there. All the way up to there, and there's your sell. So let's save that, like so. There we are. And that resolves the question I've had. Let me just double check too. That's gas line 3. Okay. Oh, I didn't mean to turn it off. And let's go back to the other one. And that's gas line 3. Yeah, I knew that they were pretty much identical. I was a little confused what the issue is there. All right, let's close that now. So now they're matching again to what we send out to clients. And so there it is right there. What a quiet day, huh? It's just George and Robin. Do 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 do. I just want to start singing. Do 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 do. So the yen, it's not exactly falling down, and look at the way that the weekly is there too. Do we have it up on J4X yet? Let's do that. There it is on J4X. You know, we got a couple reds going on, just like Chicago Quant right there. And we've been in the sell since, well, right here. So it kind of missed a couple days, but then again, this is the best public indicator you're going to find to get as close as possible to our work. So we always recommend it, the J4X, for that reason. And then, last but not least, let's dance our way over to the Mexican peso. When I say Mexican peso, I see John Wayne, I see Rock Hudson, I see all these cowboys. You know, I'm just a cowboy at heart. We ride. All right. You can see here the Mexican peso has been lifting. It's cleanly through the weekly. It's been in a daily buy since back in here. So look at that. That's heading towards the 50 percentile. But it's a nice tight market. You know, I have to give that a lot of credit. The currency itself is not exactly getting beat up compared to some of these other currencies and the moves percentage-wise. So it's a pretty good trade going on there. Now let's slide it over onto the J4X. Same situation. Lots of green, just like Chicago Quant. See? Right there. And that's interesting how it went in, broke out of the buy with the indicator here. And obviously, since it's not matching up with these, you can't take it, of course. You know, like you wouldn't get short. You would just go, I guess it's going to drift a little bit until this joins in with reds. See, when it breaks down and the reds join in with the green line, it's a winner chicken dinner. And that's how it matches up. But sometimes it's a little laggy. But that's all right. Like I said, for free. You know, they always say, in the options trading, we always used to say, there is no free lunch, but you can get a hot dog and a soda for free. We never considered that lunch. That's a snack. So when we were so busy on the trading floor, we would send somebody out to grab 24 hot dogs and 24 Cokes or something like that. Because we were starving. We'd been working for 5 hours, couldn't walk out of the pit. Be like, I need to kill a dog. I need to do something. I'm starved. I myself would chew on gum. I would chew on gum. I could put a piece of gum in my mouth and it could be in there until it turned into paste. And just be chewing away. From there, we're done the currencies. Unless anyone from anywhere would like to see a currency, we would put it up there. But from there, we're going to drift over to the commodities. So check out the metals first. And there they are right there. There's gold. The pressure's on that. And we are in a weekly sell. What's this now? After Tuesday's U.S. trading, Microsoft published the company's quarterly earnings, which beat the market expectations. On Wednesday, the stock price of the company was indicated by the futures markets to be set to start the day's trading at 3.5% gap up. That is not trading advice. Okay, cool. All right, let's jump over to gold. Right there, there's the gold. And that pressure's on. And then let's take a look at silver. There's silver. Silver is doing the same thing. It's trying to battle its way up. It's actually up for the day. How about that? That's pretty cool. But we're so far away from that 24.55 area that seemed to be a really interesting support and resistance zone for over a year now. That's why we have a line in there. You can see there's that line is at the 24.55. You see how it bounces off of it on the way up, supports it on the way down. Now it's broken it altogether. You see here it became resistance there, became resistance there, became support there when it was up in the 28s and 29s. So it's a very fascinating. You can see how it bounces off of it many times. Not sure what the magic logic is of it, but that's what it is. And let's take a look at silver over on J4X right there. Lots of red, just like Chicago Quant. Look at that. It's bottoming out in here. We get a green there, and it's turning up. And it could be an opportunity. Opportunity. That's what traders say. They always hate the idea that they missed an opportunity. That's all you can ever ask for is an opportunity. We won't ask for it to go up. We won't ask for it to go down. We just ask for an opportunity. From there, we slide over to the copper. Copper, oh, look at that now. I know when I sent that out this morning, it didn't look like that. Let's check out copper from what we sent out 3 hours ago. Almost 4 hours ago now. 3 hours for sure. And copper. Yeah. Oh, okay. Yeah, copper was trying to lift. And now I'm a little confused out of that, but all right. So what did they change there? Let's see if I can see what they changed. Looks like they may have changed the data. I hate when that happens. Yeah, they possibly may have. Yeah. See that here? Look how high that was there. And that's not that high anymore. The high has been knocked down. So that's why it's looking a little funky monkey. We'll have to go and fix that. You're right, Robin. When it rains, it pours. All right. From the copper, we'll go take a look at platinum. We're watching July platinum now. Yeah, it slipped into the buy there yesterday. How about that? And it's up today. Cool. But look at the weekly. Still dancing underneath. And went into the sell in the $1,000 area. And it traded down to the $900 area. So it had a 10% drop since we went into the weekly sell. I think I need a sip of my tea. Oh, Tay. Let's check out oil. And there is the crude. And it's backing off a little bit in there. Whereas this morning it was up. We can literally get rid of that now. And then let's check it out over on J4X. Let's see what the Brent is doing. Same thing, red. Oh, look at that. We got a little green going on, just like we have a little green going on in the West Texas Intermediate. And you got this line trying to bounce up, too, at the same time, with a green developing. So we're starting to see some positive force there. We were through the buy number at one point today. Let's check out the back month. There is Rocktober, or better known as Halloween. Now that's pushed underneath also. So now it is not a plus anymore. And our weekly, you can see it's just hanging on by the hair of chinny chin at 72. So those two are that way. Now let's take a look at nat gas. Where's nat gas? There it is. We're looking at June nat gas now. You see that's holding up pretty well. Let's see what it looks like over on J4X. American Nat Gas right there. You see it's got that going on for it. And at the same time, two greens here and a green line there. And sure enough, we're 3 days in a buy here. And this is joined in, and we're 2 good clean days here in a buy. Not bad. Like I said, it's 70 percentile, basically correlation. That's not too bad of our math, since we're 90 some odd percent all the time, anywhere from 88 to 90, 91 or something like that, or 86, 91. Let's see. From there, we're going to drift over to. I know there's a. Oh, I know what I want to see. I want to see. Oh, I just got a message. Probably Apple News or something. They drive me crazy when they do that. Let's see what it is. But let's take a look at. Yep, Apple News. I hate when I get Apple News. Let's check out the European natural gas. We know that the European natural gas was trading almost up to 30. You know, ours is trading at $7. They run up to 30. And at the same time, it has fallen down into the, I thought it was like the mid 28s area, or high 29, low 29s. I'm sorry, low 29s. Let's see if we can find it here. There you go. Oh wow, look at that, down to 27.85. Cool. I love seeing this thing drop down. That's usually a positive. I mean, I know that seasons are changing and all that, but you know, I hate seeing the oil costs so high for Europe. It's you know, it's just sad. Totally sad. So, you know, it's moving down too, and that's good. Now it's only like 4 times. What? 4 times 7 is 28, right? Yeah. So now we're. I mean, we've seen that ratio get up to 6 and 7. It's been wild. I saw it at one point at 10. Can you imagine that? The ratio was 10. What else can we say about all this? I guess that's about it. That's the European natural gas. And so that's the pressure we've been seeing. All right, that pretty much cleans up, you know, the 2 different major sectors of commodities, and that's the energies and the metals complex. And from there, we'll just take a quick look at the soybean. I mean, unfortunately, Ducascope only does the soybean, or we'd go through a lot more of it. But if you want to see something, just shout it out. We'll put it up on ours. You can see a couple days of the soybeans in Jan. Not Jan, I'm sorry. They look like, what is that, April? I think this is the May contract. So this is the May contract. Let's put it up on the screen here. And there's May beans. And that's 1685. What could that be? Could that be... let's see what other beans we follow. We follow the September beans too. Where's the July beans? No, we follow July beans. Let's see if this is July beans. That's what it is. So they're following July beans now with Ducascope. So it's July beans that they're following. You can see it's in a sell for 3 days. You can see here on J4X, it actually has it in sell for 4 days. Interesting. And you can see the pressure there. There you go. It's ahead of our math. So it went into the sell on this close. We didn't go into sell until this close. So you can see the pressures there. We're still on the weekly. And then let's just show you what deck looks like. I'm not deck. November. There's November beans. November beans are trying to push up this morning. Now that went into the sell here. Right there. So And that's in a weekly buy from there. All right. From the grains, what else can we talk about? Well, let's take a quick view of the stock indices. And we'll finish it off with a short term. And there is the NASDAQ 100. It's trying to lift up. Let's put it up over here. Right there. There is the S&P 500. It was trying to push up into a buy today, but now it seems to have pared back a little bit. Let's put it up over here on J4X right there. Then let's take a look at the Dow Jones Industrial Average. Same situation. Now that's still plus. So it's trying. Right there. So it's trying. It's trying to lift up. They're trying to get going on some level or another, but not enough to really excite it. Let's see, what is it? Is it up? It's up a little better than half percentage point. Now we'll go quickly, like a bunny, and look at the intraday itself. Quick like a bunny. So the S&P 500 is up about 12 points. The Dow is up 200 points. And the NASDAQ is up 16 points. And there's the intraday trading where it went into the sell right. Is that one? Or is this one? This one. Went into the sell there. And of course, heavy odds as usual. 9 out of 10 times it's going to be right. And went down. And it went into a buy where? Right there, maybe? Went into the buy there. They popped it up and failed and went back into, nope, no sell yet. Then the sell there. And it just drifted in the sell all the way to there. Went into the buy right here. And you got that out of it. Went into a sell there. You got to there. Went into the buy here and you just drifted again. Went into the sell right there, no, right here. Went down like that for a couple of bars. And now it's in the buy there, and it's got as high as there, and now we are threatening to go into a sell. Let's see what happens. And the markets are getting ready to open up in 1 minute and about 30 seconds. So, this is Doc from North America. Have a safe and smart trading day. And for all you other currencies out there, I'm sure this will stop and clean itself up. It's just a matter of time. And for the King Dollar, I guess it's going to stay King Dollar for a while, a little bit longer. And happy trails to you until we meet again. Happy trails to you, to all our trading friends. Ta-ta, traders.